Good morning, everybody. Sorry for not hopping on yesterday. You could probably hear it in my voice. I'm still a bit sick, so. But yeah, overall, since Friday, or Sunday, you guys can see how price is basically gravitating towards what we wanted to see it move to. Right, we continue to push price to the buy side. This is a bullish breaker here. Right, so we'll see if we can continue in that direction. Overall, that's going to be the narrative for today. We are ahead of CPI. So CPI protocol's in effect. You may ask, what is that? It means lower your risk. 1 to 2 trades, preferably one chance. If you take a loss, stop for the day. Don't even try again. It's not worth it. CPI is going to be a very heavy hitter this time. It kind of always is. And the expectation is that price is one-sided when CPI comes out. So most of the time it's not going to give you that two-stage behavior that the other assets give. But can you guys see my webcam? Gotta be kidding me, dude. Gotta be kidding me. Could you guys let me know if you could see my webcam? I don't know what the fuck. Oh my god. What the hell is happening? Let me see. It says it's connected. I don't get it. I don't get it. That's so weird. Let me try to unplug it. So annoying. This freaking webcam is so expensive. Shit's not working. Can you see it now? So annoying, dude. Oh. Can you see it now? Looks like it popped up. Not yet? Looks like on my end it's working. I'm sorry for the delay, you guys. Oh, okay. Oh, man, I don't know what the hell's going on with this thing. Didn't work at all the other time in the other call. But yeah, all right, well, we're back. I don't know what is happening. I always have a tech problem with either Zoom or now the freaking webcam. But hopefully it stays. Let me know if it gets lost, right? Because I'm probably not going to notice. I can't really tell a lot of times. For some reason, it'll show up on my end, but it won't be on YouTube. It's the weirdest thing. But yeah. So actually remove that. So we could see that the Nasdaq, like I said, has pretty much did exactly what we thought it was going to do and gravitate to the buy side. We got this inversion for value gap here. So it looks like it's holding, right? So nothing tells us that we're going to short. You want to be cautious though, because we are pre-CPI and we're pretty damn close to all-time highs. We are at all-time highs for the S&P, right? So the Dow has relative equal highs, and the Nasdaq still has the buy side up here that it could target. So definitely want to keep that in mind. I'm probably going to disregard some of these lower markups, simply because it's too far to really even worry about it. Right, and so we got this order block, right? We got the large wick in here, so we should not at all have any reason to try to come down to here. This gap in here that we see, I'm assuming that that's a new day opening gap. Yeah. So if we outline that, you can kind of see how it was used overnight. It's pretty interesting. So yeah, you can see this open price. You can see that we dip below it overnight. We have set relative equal lows here, so we got to definitely be cautious of that. You can see that it's just been bullish all the way up until today. Took a pretty strong nosedive, leaving these equal lows, which is kind of interesting. And then, of course, it exploded. This was a market maker buy model. And we got the central bank dealers range and flout projections pretty much perfectly in alignment, it looks like. You see how this little line's up here? And we have the big lines. Since it's not showing down here, the smaller line, the central bank dealers range and the flout range overall is pretty much overlapping, so it's a good thing. Makes it easy. So we'll see what happens. If price gets down below this low, right, say it disrespects all this and DXY rallies, then that would set the stage for us to target these relative equal lows here. So we'll keep these lows in mind just in case. And breaking down below here would obviously be a problem for buys. Good morning, Mike. Yeah, yesterday was a horrible morning. Ugh. I was so sick. I feel much better today. But yes, so look at the bonds and yields. Yields are still declining. It's somewhat just kind of sideways a little bit for now. Been a pretty small range for the week so far. This just simply, to me, looks like a retracement to go lower. Now that changes if we break above this high. So we have these areas in here that need a hold price, and it should be able to come and seek these equal lows. Here, there's equal lows here too. So again, if the yields go lower and the bonds continue this run higher, which is what it looks like it's going to do, support this, right? We got past equilibrium. We hung around for a little bit, but it's now opened up. And now we got really obvious relative equal highs up here. So if this is going to go higher and these are going to go lower, that means that DXY should be able to reject here and go lower from this inversion. We should be able to see price get down there, or at least react away. It's kind of sideways, pre-CPI, pre-rate announcement. So we're going to have to see, or be cautious, obviously, of those things that are on the table. But for now, it looks like it's still going to be interested in going lower, assuming that it's going to respect this. So we're going to have to see what this news announcement is going to be with PPI. It's pretty dynamic news event, right? Very nice injections of volatility a lot of times. But because it's pre-CPI, we have to be cautious, obviously. We got the currency futures. If DXY is going to potentially go lower, we're going to want to see this go higher. So we have this order block. Unless that order block is invalidated, we also have a weekly order block there too. So weekly down here and a bullish order block here. And we got SMT at the lows. Right, so nothing is telling us the price wants to go lower. Unless, of course, it breaks down and proves it by breaking through multiple PD arrays. 3 PD arrays specifically. And then DXY goes higher aggressively. That would put our interest potentially in targeting sell side. Otherwise, like I said, this is too obvious up here. And we got to run on stops, shift in market structure. So technically from this high to this low that created the order block, should not see it come down to the 50% if it's going to be a healthy move higher. If it does do that, again, you got to be flexible. Right, so we got the euro reaching into this fair value gap. So we got to monitor what the reaction is going to be here. If it inverts this, that's an early indication that we'll take out the low here. But yeah, we bounced outside the range and then just kind of came right back to equilibrium. Which, you know, it's not too surprising given the fact that CPI is tomorrow. We got a rate cut in 6 days. So the moment of truth is quickly approaching. So yeah, just some things you got to be on the lookout for risk-wise. Good morning, Tony. Daily order block? Wait a minute. Oh, it's a weekly order block. Whoops. Yeah, so we've got this weekly bullish order block. It hasn't really turned it on yet, right? It has to change the state of delivery by closing above the open. And it hasn't really done that. So technically this is not, it's actually not something that we have to pay attention to really. You know, it looks like it's creating it. So we'll see once we get above this, that'll trigger us in to get this upper gap up here, which is right here. I think I'll go with the weekly one. But yeah, we'll see. From this weekly chart, for us to be overall bearish and not bullish, it's going to have to break down below this low. Because that'll be 1 shift, 2 shifts, and multiple PD arrays violated for value gap, order block, swing low. So that would put us in position to try to target something like this or any of these lows. Otherwise, we will continue to see this respecting this high to this low as a balanced price range. As you can see, it's done for weeks now. So yeah, hopefully that makes sense so far with the DXY bonds and yields, what the overall sentiment is, which is bullish for the currencies, bullish for the indices, bearish for the DXY. Obviously, it's pushing against that at the moment. And we're kind of range bound here, kind of range bound here. It's range bound everywhere, aside from some of the indices, Nasdaq and the S&P. I had an eyeball up here. We've been talking about buys, bullishness, haven't talked about sells at all. And if you engaged yesterday, or any of the days this week, bullishness has served well. Yesterday did have that sharp decline just to basically dig a little bit deeper into this order block. And now we're at the highs, so above this fair value gap too. So it's going to have to really break down below this low for me to want to find any type of short idea. This low with breaking this low with displacement would make me interested in trying to maybe target this and maybe some more of this trendline liquidity. Right. Otherwise, like I've been saying, we already kind of took that high. We actually got relative equal highs here. Then we got this high up here. So yeah, those are potential buy side targets. Got an inversion here. It's on the 8 hour. But yeah, so everything, looks pretty reasonable for us to have the assumption that price is either going to be range bound today because it's pre-CPI, or it's going to want to rally. The red folded news, we'll see how the reaction is. But I'm assuming that we should be able to see something to the buy side. I called the type 2 dealing range yesterday. I think I shared a markup. I didn't spend a lot of time on the chart. But yeah, price ran it. I can go down here and show you guys what I was talking about. So when price declined into here, it hit previous day's low, Monday's low, relative equal highs, higher time frames bullish. So the only thing I was looking for would have been bullishness. And we could see how the highs up here, low, high, failure swing after taking sell side liquidity. Ironically, it happened in the macro too, 750. 650 started it, 750 put the low, and 850 delivered price to the buy side. Once we got above this high, that created a type 2 dealing range reversal within a bullish trend. Relative equal highs were up there, and then it slowly dragged its way up there. Type 2 dealing range is a high, low, high, failure swing, preferably at a PD array, preferably at some type of sell side or buy side. And then once this is displaced through, that's a shift. That's a type 2 dealing range reversal. Right, so and once we break this, the likelihood of this getting targeted is pretty high. And you can see how that worked out. It's a powerful gem I've been talking about for the last couple months. I've used it for like 3 years. But basically half the time I've been trading, this tactic's been pretty effective. Pretty much everything, like market maker models. There's things that I've shared in my private group that were pretty much the same stuff that I use today, like 3-4 years ago. I have some stuff from 2021 where I'm talking about market maker models. So the earlier you could get good information, the more effective learning you'll have. So that's why being around a community like this is extremely important. But yeah, so let's kind of get rid of this. Clean this up a little bit. You can see the daily fair value gap was used as well. Where is my new day opening gap? Where the hell did it go? Oh. I don't know why it didn't stick. It's kind of dumb. But yeah, so you could see the overlap of the new day opening gap. You can see the overlap of the daily fair value gap. Use it as a launching pad. All right, and then we see the price use that to run higher using a market maker buy model. Consolidation, accumulation, reaccumulation, smart money reversal, first stage distribution, second stage distribution, followed by a fast move targeting the original consolidation high. How do you know this was what it was? Because of the fast reaction here at that second stage distribution. If you're unsure whether something's a market maker model or not, first of all, you're always in a market maker buy or sell model. Always. I don't care what anybody tells you. So you just have to determine which one you're in, where the higher time frame's going. And then when you see stuff like this, right, second stage distribution, delivering aggressively, that's how you know that that's a good example. So now we got a potential breaker in here. So if it was to break outside of this, invert this fair value gap, that would be something I'm interested in, potentially putting something behind if a model can show up in there. This in itself could be a model, inversion fair value gap. You could use this one too. But if this holds, right, we have equal lows down here. Narrative is higher time frame bullishness. It's been pretty fast overnight, so it's a bit concerning. So we'll see what this news event does, right? But overall narrative, in a perfect world, we want to see price go higher. Right, but you got to keep in mind that CPI is literally right around the corner, and a rate cut. So smart money moves off institutional sponsorship, big moves, and big moves come from, for the most part, red folder news events. So we have a red folder coming out in a couple seconds. So we'll see what happens here. Is DXY going to basically use this to reject and fall in line, targeting the sell side like we've been talking about? And then will that result in this breaker being violated, inverting the breaker and inverting these fair value gaps, shifting market structure so we could then try to catch a buy, targeting something up here? Damn. So yeah, it looks like it was looks like our assumption was correct. PMI is very quick, like I said. It could sometimes have that effect. So yeah, they're gonna probably yank this back. God dang, look how big that was. Well, at least we we were right. Right, the narrative is bullish. It's still going higher, and it is what it is. So yeah, this high, now we could take off the breaker there. This high to this low should be able to be a balanced price range. We should not see price come back to the center here. It should hold. It could retrace all the way back. It may not. Seems like it's really interested in hurrying up. See, is it like an order block or something? 2-week order block there. So yeah, I have no intention to short unless proven otherwise, but the DXY did exactly what I said, reacting from that. So let's see what happens here. It's not worth chasing price right now. We're still ahead of the 630 open. So even if you don't take a trade at all up until 630, we still have a chance to let price chill, okay? Let it kill the gamblers and then set up the snipers. Watch that gap right there. So what do we do to get in line with something like this? Well, if you have like the seconds charts and you got that framework like I just showed from that fair value gap, if it's going to go higher in a perfect world, this would be a run on stops, continuation, shift, change in state of delivery. You'd wait for a fair value gap and then simply target the high up there. Like I said, I'm going to wait, but that's a good thing to study. It's just amazing how we could just get on and know exactly where price is going to go in minutes. Like, I'm sick as hell right now. Doesn't even matter. So yeah, we got that order block there. So now we've shifted. We're now above the high up here. DXY is not safe right now. It has reacted and done what we wanted it to do. So I'm assuming it'll overall continue to drop, which overall will continue to push this higher. In this delivery in here, we already took out the low, so we shouldn't have to breach this 50% level if it's going to be reliable. If it does breach that for this opportunity in here, if an execution was taken, you have an order block, okay, a swing low, and I think that's enough to get us out of a trade if something was executed. So maybe, I mean, you could even use the mid portion of this if you wanted to for validation, but higher time frame framework, and now we're looking at how to navigate the lower time frame. Obviously that was a good move, right? From the order block, did exactly what I assumed it would do. Didn't offer the YouTube model at all, so you don't have an opportunity if you were trading the YouTube model. But if you're using the order block, right? If you're comfortable with that, if you trust what I just said, obviously it offered something, and we're in line with it. We called it, said where it was going to go, what it was going to do. So it's the way it is. So yeah, DXY is still pushing lower. Remember I said if this is a setup, we're targeting the high up here. I think it already ran 20 to 30 points too. Yeah, exactly 30 points. This is a reason 20 to 30 points is so helpful, because generally price will do some type of retracement on that lower time frame once we pass 20 to 30 points, generally. Obviously not all the time, but for the most part. So now we're gonna finally get a delivery to a fair value gap here. See how that works. So yeah, there's that delivery to the FEG. DXY is kind of pulling back a little bit though. So yeah, I'm gonna essentially just elect to wait for a macro. I'm not about to chase this right now. Our continuation idea that I just described, that enables you to get into price as it's moving, even if you miss something, without feeling like you chased it, because your model's in place, just on a smaller fractal element within price, within the larger swing. So that's part of the reason why you only need one setup. You don't need thousands or even multiples. It's good to have an understanding of multiples so you can get extra confluence and potentially have extra opportunity. But you really only need one, because every model has continuations in it. Okay, we're gonna watch this low, see how it wants to treat it. So again, just like I said over here, right, when we were on the 15 second, right, it would have had to offer something for a fair value gap if that's the idea we were trying to look at. See, look what happened if you executed and tried to get more than 20 to 30 points. That's a difference between profitable and getting stopped out a lot of times. But if we're thinking about what I just talked about down here with this move, same thing would apply here. Okay, if it runs out the swing lows, hits a PD array, great. Running up above this high is a shift, leaving a fair value gap, leaving an order block, something that we like to engage on after the sequence of events takes place, puts you in, or it gives you the ability to then get back in line with price without chasing it as it's going higher. You wait for the rules. And if stuff doesn't come out, if it doesn't show up, what do you think you need to be doing? Nothing, right? Unless you want to be a gambler and blow your account. Right? It feels great in the moment. Feels like we're doing everything right, when we do that type of stuff. But you end the day in a loss and you feel like a failure. It's not worth having to deal with that feeling when you could just simply follow the rules. So yeah, we'll see what happens here. Let's go double check some of these other assets. See, this blew out the high. Blew out the high, blew out the high. So yeah, it's just on a tear, ripping people's face off to the buy side. So that's all we're going to be trying to participate in. I do see, though, that the Nasdaq has a massive sell-side liquidity pull down here. It looks more crazy on the normal futures contract. So that's way down here. Just right in here looks... it's a little bit concerning how absolutely perfect that is. I mean, everybody and their mama's trying to buy now too. So if we break this low, right, if it digs down there again, we may set the table for these lows getting taken. But yeah, with this being the case, right, we're gonna still favor buys unless that happens, right? Like this taking out this low. And we're just going to continue to push price higher unless that happens. And we're going to wait, like I said, for the macro to come out. Let's let time do a lot of the heavy lifting in terms of picking the setup. Because your model and move that you're going to participate in should start or look to continue through the macro, right? If your model isn't set up in a macro at all, it's a great thing to use as a filter, right? You will miss moves doing that, just like how you'll miss moves doing anything else. But it's just one of those things. It helps you submit to the fact that, You don't have to trade every day. You don't have to take a trade every second of every day. You're waiting for something specific, you know. So you shouldn't get FOMO in something like this if your model wasn't there. It's like getting mad at someone else doing their job and getting paid for doing their job, and you think that you should get paid for them doing their job too. When you have your job, your model, right? Someone else may have caught this move, and maybe it was their model. That's great. If it's not yours, why would you be upset? That's like, again, getting mad at someone else for getting paid to do their job when you have your job. It makes no sense, right? At first, we don't see it that way, you know. But it's a very helpful way to view things and combat the feeling of FOMO. And even if you miss a move and your model was there, it is what it is. You know, you guys that have been here for a while hopefully have seen that every single session we talk about something. I already talked about something that, you know, could have been executed. You know, before the fact, we talked about where it was headed. It went right there. It's not like this is new, right? It's not like this is one-off type of thing, right? This is all the time. I'm doing this so often. Every single day in my private group. And twice a week here. Both on a large view and a small view, right? So you have no reason to have FOMO. What you need to do is be patient and you know, take good advice and, you know, put in the chart time, and you will be shocked, especially because you guys have this community and have someone that's not ICT showing you every day that this works and how to do it. And you can ask questions, right? It's not going to take you 5-10 years. So yeah, you have no reason not to be patient. But yeah, so we're kind of stuck now. Time distortion, DXYs came all the way back. Beautiful response though, like I said, off this daily inversion. I don't really like how it's doing this now. It's kind of stuck. Now we're stuck in between this fair value gap and this one as well. Yeah, saying you're wild, bro. Shit, hopefully one day I could be like him. He's spectacular, but even if I don't, I'm satisfied where I'm at. And you'll be satisfied where you get to as well. You know, it's something to aspire to, that's for sure. Mike, 50% of the wick on August 13th. So like a previous day. August 13th. Are you talking about that? It's getting blown through. August 12th. Yeah, you notice how we hit. Notice how we hit this over here. So we're going to want to mark that out too, because that's a target. Beautifully hit it. Yep. August 13th. Yeah, so that's an opposing PD array to the run higher. And so what happened, right? It displaced, hit an opposing PD array, and what did it do? Triggered in a like a stalling effect, right? Or a rejection entirely. Because price traded up here, right? This large wick, and then traded down, and literally that high has hit the 50% of that higher time frame wick. This may lead, if DXY goes higher, this may lead to us targeting the sell side down here, leaving those highs maybe for CPI. Obviously, we need evidence of that. We're not just going to assume that, because we have a lot of back-end information telling us we're going to go higher. Right, this deep retracement's nice with this strong rejection. That's healthy, right? Fast move, strong retracement, and now it looks like they just came to clean up. and are now continuing to drop. So we got to keep our attention to this as well, just in case. If we were to break down below this, this will turn into a market maker sell model targeting the low. But again, if it doesn't, right, we got this run on stops here, retracement to the order block, holding, 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 holding. And so if we get a displacement above this high, shifts above here, here, stop hunt, PD array, lower DXY. If it leaves a fair value gap in that regard, we would have this a target. If we get displacement that breaks down below these and gets down below here, again, that may be a problem, and it may look to seek this instead. And it may have used this as manipulation, which I wouldn't be surprised if that's what they do end up doing. That then eventually targets the sell side. But for now, because nothing's told us that, and nothing's changed overall narrative-wise, maybe we see that happen soon. But until it changes, right, we're still going to just watch this and try to see if it can get us up there. DXY is not being too forgiving right now for that assumption. So we'll see. DXY did leave these equal highs up here. It's kind of concerning for bullishness in the currencies and the Nasdaq. That's pretty interesting there. Yeah, it just looks like a mess. Bunch of gaps everywhere. Look at that. 1, 2, 3. There's been a lot of gaps lately in the DXY. So yeah, we should not see the Nasdaq get below this. Preferably it doesn't do a hard retracement at all. But DXY may not allow that. It's just kind of range bound again. Back inside London's range. It's hanging around the equilibrium overnight. It's back and forth. Got the overnight equilibrium here. Open price. First 30 minutes of the overnight range. If we can measure that out. Shoot. So yeah, we'll wait. We'll see. This is the most unreliable macro. 5:50 time, AM Pacific Standard Time. Again, what has happened so far? Price has pretty much rallied up, right? Aggressively pushed through the news, came right up into the higher time frame, 50% of the wick. I believe it was on the daily chart. Was it on the daily? I guess we could say it was a daily. This low to that high. Yeah. So yeah, we'll see. We're real close to the highs. So we'll just let price print a little bit. DXY is not being very cooperative, so that is a concern. That makes me feel like the likelihood of this being targeted, it's becoming a lot more likely. So initially, obviously, we ran higher, talked about this move, and now we're in a mode of waiting, trying to see what this is going to turn into. Because this is not overwhelmingly one-sided. It's now just seek and destroy for DXY. And it's going to have to stay below this. If it doesn't stay below this, and it displaces and gets up here, that may be an early sign that, you know, we may see this run up into these levels. Right? It'd be too early to make that assumption, obviously. But that's just something to keep in mind if we blow past this. All right, these equal highs, like I said, are a bit suspect. We don't like to see that. We really don't. I would have preferred it swept this, then displaced. It's a lot more reliable. That proves to you that work has been done to trigger in stops or engineer liquidity. And you always, for every model, for the most part, at least every model I like to use, I want to have confirmation with that taking place. Some form of stops have to be taken prior to my model showing up. What are we doing when we're doing that? We're ensuring that there's opposing liquidity on the other side. There's losers on the other side. If you're trying to be a winner, there has to be a loser. So, Dow already at the low created during news. Yeah, the Dow did kind of breach this high too, huh? It's an all-time high breached. Interesting. So yeah, very large purge, right? It ran up, purged it, and then dropped. Pretty interesting. We had SMT at the lows here too. That led to this running up. Again, nothing in here is telling me I'm looking to short. Only thing that's telling us, you know, a sign of that potentially coming in the future is a DXY giving this aggressive reaction. Now, if DXY gets back below this, right, if it breaks down below this fair value gap, we should be able to be back in business targeting the lows. We got relative equal lows here too. So price is kind of trapped for the DXY in between these two equal highs and these equal lows. But again, we're still going to be on the side of the higher time frame, which is bullish. So unless, of course, we break down below this, like I said earlier, then that would set the stage for us to start seeking potential shorts, right? But I'm going to stick to wanting to see this high get taken. So I'd really like to see a purge of this and then a displacement pushing to the buy side. We're just stuck in time distortion at the moment. So yeah, nothing to do. But that's trading, right? Kind of boring. At least it should be. Yeah, GBP and Euro. Yeah, I talked about that earlier. It's got the SMT at the higher time frame fair value gap. One's tapping in. I believe GBP tapped in. No, the Euro tapped in. GBP failed. It's in an order block though. So that's a SMT. We got relative equal highs. So again, now we're just going to be waiting for DXY to fall in line. And if it doesn't, then it's just basically stuck. It's waiting for tomorrow. So I'm not interested in forcing anything. You shouldn't be either. Minute. So we do got SMT here too. The Dow's making lower lows. The S&P is sideways, creating a lower low than that. If you go to the Nasdaq, it looks like it's a strength holder. It's leaving this low. So yeah, like I said, we're still gonna try to see if we can't get up here. So I guess we are a little bit beyond the middle of the wick. Just shows that it really pushed through it pretty much. So what are we waiting for if we're trying to get involved? Waiting for your model. The sequence of events that creates your model. What is that? Is it a breaker? Is it an order block? What is the sequence of events that you use? It shouldn't be like 1,000 steps. It should just be, maybe max like 5 steps. No ICT model has more than that, honestly. Like the YouTube model 2022, it's a run and stop, shift in market structure, fair value gap. It's 3 steps. 3 things that have to happen on whatever time frame you're looking at and looking to take an execution on. That needs to play out, right? You need to see that and confirm that those 3 things took place. And everything else is just extra confluence, right, to make it even more high probability. Right? All right, so looks like we are going to turn off this SMT here. I'm going to take that off. So yeah, this is, if this continues, again, it's going to set us up potentially to target these relative equal lows after pulling in all these people to the buy side. So we're going to wait. We're going to let this open up a little bit. Look at chat. Yeah, it could be. Fritz, it could be. It's not really much accumulation, right? There's like one, right? But you know, this should be treated as an intermediate term low. So that's why if this is to be violated, it's probably going to take us down to these lows, because intermediate term lows should not get violated if you're bullish. And if they do get broken, you got to adjust. All right, we got this order block here. We're watching to see how that behaves. Yeah, appreciate y'all hopping on. Don't forget, if you guys get value from the content and you like what I do, or you've been improving with your time here, don't forget to like the video, subscribe to the channel. It does a lot in terms of me being able to reach people just like you guys that enjoy this type of content. And you're helping me help other people by liking the videos and subscribing to the channel. So thank you in advance for those of you that always do that. So yeah, like I said, if we break this low, that'll take out an intermediate term low. We'll have to see how the behavior is there, right? I'm not overwhelmingly convinced, especially if DXY is going to fall. We now have a cracking correlation. So we call one potential opportunity today, this buy side delivery up here. We waited for, you know, whatever it was going to do. It didn't offer the YouTube model, but it did offer an order block delivery. If that's your model, right? And there was a chance for you to execute there potentially. Kind of outside of the timing elements, but you know, again, it's going to be up to what you do. You know what I mean? And I just give you my advice. You know, so yeah, let's scrub through some of these real quick. So yeah, the Dow has taken out the low. The S&P has failed to take out the low. And the Nasdaq has failed to take out the low. So we got an order block here. So I can say that if we were to take this low out just by sweeping it with a wick and then displacing above this high, that would set me up to try to take a buy with DXY going lower. But yeah, we do have S&T here so far, at least for now. We got 6:30 coming, so again, I'm pretty much gonna wait, right? I'm gonna let 6:30 come out, see what we can have offered to us, get the open price, get the first presented fair value gap, and we'll make a determination based on that, or more close to that time. Yeah. Currencies are a absolute shit show right now. It's not worth even really looking at it, to be honest. And yeah, DXY is still doing this nasty choppy delivery. Ugh, look at that. Man, that's nasty. We got a really large new day opening gap here for the DXY. Something else that we could keep tabs on. Let's see if we move up a little bit. Another thing we can keep tabs on. Let's actually look around a little bit more. So this is that 5-minute fair value gap. So we'll keep that marked off. You know, why up into this level? Why didn't I mark it off all the way to the bottom? I could do that. But this high to that low, if we're going to use this fair value gap as something to watch, it's going to leave that portion available. If it does use this and goes higher, that's why you'd only have to measure it out to this, right? It leaves open some of that lower portion. Why? Because there's already sell side, already buy side. So what does that create? A rolling balance price range. So it shouldn't have to come too deep into this. It could come all the way down to it, because I'm assuming that that's probably an order block. Yeah, see? Yeah, if this is going to go higher, it shouldn't have to come down there, right? You could see that it's, you know, buy side, sell side delivered in here. Displacement that, you know, got above it. So again, the mid portion of this fair value gap should be able to hold in price. And we give it up until, you know, this high. And then once it starts violating that, then again, that puts this in jeopardy. And then takes our buys off the table. Right, but if we move up a little, see if we could find, yep, something like this. So yeah, let's see, where the hell is, there it is. All right, so we're gonna watch this, okay, because we got this delivery to the buy side, hit the 50% of the daily fair value gap. Now we got a retracement, okay, came off that high fairly aggressively. So it delivered both buy side and sell side up here. Okay, so we got to definitely monitor the mid portion of this wick. Right, it looks like it's respecting it pretty aggressively, right? So that's why this is going to be important here. This rejection hitting into this fair value gap here that we talked about a second ago should be able to be treated as a BPR, and then we should overlap this fair value gap with another displacement that essentially will act as a change in the state of delivery. And then of course we have the high up here, right? But you can get it a little bit early if you see it like this, right? At least you could start making assumptions a little bit early, but preferably we want to see it break above here, use that as support, then try to find our model unfolding with DXY declining. That would be the best case scenario for us to target the buy side up here. Now again, if this fails and we reject this fair value gap, and then it breaks down below this one, I mean, there's no reason that we would fight trying to get down into this level, especially if DXY was to rally too. Right, but that's contingency plan. Initial overall objective is going to be to overlap this and try to see if we can get one more move higher. If not, like I said, we have a plan to make adjustments if necessary. If not necessary, which right now it's not, to adjust, right, we're just going to continue to go higher and favor that perspective, because the higher time frame is bullish. So, you know, we're ready for whatever it wants to do, if it does anything at all, right? CPI is tomorrow, so that's always a risk. So yeah, we got above this down candle, so let's see how that reacts. So yeah, there's really nothing to do. You guys have any questions? So reversal around 5:30. PPI can vary, honestly. Kind of varies. Most of the time it does this type of thing. It goes crazy and then just kind of stalls out. Especially if PPI is ahead of CPI. A lot of times it is. Sometimes it's not. But, you know. So yeah, here we go. Starting to overlap now. Now we got displacement through the fair value gap we're watching. So now it's going to have to stay above this. If it doesn't, we have a fair value gap, swing low, and then we have this 50% of this fair value gap. That's our 3 PD arrays that, if violated, would send our interest down to the sell side. All right, but now that we've displaced through that, let's watch and see. Is this going to invert? Because we're ahead of the open, we may see price stall out. It may continue what it's doing here and just stay sideways up until the news event comes out, or not the news, but the open. Yeah, we'll see what happens. You just sit and imagine how many people are now trying to chase price to the buy side. Yeah, but I do like this overlap here. So again, this is supportive. And let me take some of this stuff off so it's not confusing. It is pretty supportive up until this point. DXY is kind of a shit show. So it's kind of a iffy odds to really do anything meaningful before the 6:30. But it looks like it's holding. DXY is displacing. Hopefully, more than the opportunity is being grasped for today. Like the thought process, like behind my opinions, hopefully I've been able to drive that home today. How to navigate this environment. And some of the things I was talking about, like the continuations, you know, the importance of obviously time and patience, what to expect during times like this or weeks like this. So hopefully the premise of the ideas that I've been talking about with you guys has made sense. Because that's what's most important, not, oh, am I taking a trade today? You know, the premise and things that I talk about literally will give you that answer. Do I take a trade or not? You know, so the way that I go over things, kind of, if you think about it, I'm literally telling you, you know, from what I've learned, when to trade, when not to trade. You know, what tells you, you know, whatever decision you should make or not, you know. Yeah, pretty beautifully delivered in here, at least for the moment. Yeah, we'll see what happens. Too close to the open to really push anything. So yeah. So yeah, if it was to displace and get down below this low, again, that is the condition that will put me in position to want to take a short. Otherwise, shorts are not on the table. We now just got above this high. I think that's an order block. Yeah, beautiful. So let's see how that's treated. We now have a new reference. We've got the middle portion of this. Damn, that was a good eyeball right there. Shit. DXY is getting spicy. We definitely got to monitor this wick. We got to monitor the quadrants within the wick. They're going to be significant. Is that the 50% of the wick there? Man, it's been a pretty reliable move through that fair value gap. Because we're so close to the open, again, it makes it a bit sketchy. Especially because of what we've seen this morning. I mean, DXY has been nasty. Super nasty. Definitely an abusive relationship with freaking DXY today. I won't stand for the abuse. Right. $20 is like right up here. Studying this overall delivery in there. From here to just about like right in there's close to 20. Yeah, like that. We'll see. Because we're ahead of the open, we may not even do much leading into the open. The open may come, it may wick back into this level, stop any early buyers out, then go. Or it could just totally, unwind entirely. Right? It's kind of a gamble at this moment. Even if you have the narrative, that doesn't mean that it won't consolidate. Doesn't mean that it won't retrace. And in times like this, ahead of CPI, it's more likely that stuff like that's going to happen because it wants to hold you in, build liquidity, and then victimize you. That's what the whole purpose is. At least how the algorithm reacts with news events and liquidity. It's still holding. So again, if it breaks this low, we're definitely going to try to target the sell side. Stays above this. If it leaves this low, that's an intermediate term low. And it should just be a pretty decent ride up if it's going to do that. That's what I'm leaning on at this moment. So we'll see if we can continue. See if we can get above this. Whoops. We left relative equal highs up here too. It's kind of interesting. So yeah, we'll see. We'll see what happens at the open here. Just in time distortion, so but yeah, that inversion fair value gap is held. We'll see if it's going to continue to hold. Took an early entry, assuming that we were going to invert. And I just took 22. Satisfied with that. Yeah, so if any of you guys thought about executing, just know that was a warranted opinion. Because it's ahead of the open, I'm not willing to hold through it. I'm probably right that it's going to go higher, but I'm not willing to hold through the open. I've learned my lesson many times. See, look at that. So let's see what happens here. Remember, 20 to 30 points is all you want. If you can get 20, great. Especially if you're in a move that's ahead of the 6:30 open. Because who knows, maybe there's another thing that shows up. I do think that this is going to still hold unless it breaks our line in the sand, which is down here. Why this low? Because this is an intermediate term low. Higher low to the left, higher low to the right, inside of a fair value gap. So, relative to this 2-minute chart, this is an intermediate term low. And we're going to see if this inversion here can hold. If it doesn't, low, high, that peaked above this, lower low, this high to that low would then become a bearish breaker. I could feel right now that I have a fever. I'm like sweating, but I'm cold. It's crazy. I don't know what the hell is happening. Freaking sick, man. I hate being sick. If you're sick and you trade, right, you just want to get on. I feel like I have an obligation because I want to help you guys. So, just took yesterday off, but if you're sick, you gotta lower your risk even more. Yeah, see, there's that risk that I talked about. So because we've now slammed through that, the likelihood of us coming down and taking this out is pretty irrelevant. You see why I don't hold trades through the 6:30? That rule, just literally real time, was proven to be extremely vital. And the difference between a profitable day and a loss that's unnecessary when you were in profit. So like I said, if we blow this low out, it's targeting the low. How amazing is that? Flexibility and forecasting ability to be on one side and then know exactly what's going to trigger it in to go the other way, so then you can be flexible. Now, a lot of people on YouTube even talk about this process. They don't even know like what to do. They just, oh, I'm wrong. Well, okay, what are you going to do about it? Are you flexible? Can you get in line? Or are you just going to chalk it up as a day that you got it wrong? Right, we'll see if this wants to extend through the low. Let's go take a look. So yeah, there's SMT now at the lows. So if it doesn't, the SMT is going to be the reason why. We do got relative equal highs up here. Kind of move some of this around. Yeah, no, got a fair value gap here. Got relative equal highs. So yeah, we'll see what happens here. Definitely got the SMT right there, at least for now. May not be the case in a couple seconds. Overlapping fair value gap. So characteristics that would lead us to believe that we're going to dig even lower is if price comes back into this, or just refuses to come back into here at all and just keeps moving. DXY has a cracking correlation, so we're in low probability right now. Currencies are rallying. Makes me feel like this could be fake, right? Just to purge the early buyers out. Yeah, I wouldn't be surprised if we get a quick reaction here to purge these lows. Again, we got relative equal lows here. We talked about this as a possibility early on. And I said if we were to break down below this, and then it turned into if we break down below this, it'll get there. And that ability to be flexible, hopefully, seems important, right? And seems easy enough to understand because, you know, there's going to be a lot of times, especially early on, when you have to be able to be flexible. Right, this could very well just be a wick down, especially if DXY drops. This could all be fake manipulation. You know, the only way that I'll trust that is if we get back up into this level. Right, otherwise it could blow this out. I think they're going to save the all-time highs for tomorrow. CPI could literally send one candle all the way up there. All right, but we'll see what happens. I'm surprised that we haven't had like a deep decline into the level that we were talking about, like the fair value gap down here and these equal lows, or at least even a little bit deeper. I'm surprised a little bit that they didn't do that because of the rate cut. It makes me wonder what this rate cut is going to do in the market. What is it going to do? Are they just going to continue to be on a tear? Just continue to smash higher? You know, could very well be the case. But we'll see. We're in very uncertain times until the rate cut comes out because it's going to have a huge impact. Like, most people don't realize what the hell is about to happen. Like, it's going to be massive. Super positive for stocks, for the housing market. You know, people they're going to look to buy. People wait for rate cuts to buy homes. Right? And that stimulates the economy. So a lot of stuff is riding on what's going to happen in 6 days. So yeah, if this is going to hold and go lower, this low to this high, we should not trade into the upper portion of this fair value gap. This should be able to act as a rolling balance price range. Right? Did a lot of buy side delivery here, came back down, danced around a little bit, and then displaced. So this should be a balanced area of price up here. So it should hold. And if it doesn't, guess what happens? It tells you that we're not done going higher. And we're back in line with the initial idea being bullish. Given what we've already seen right now, my objective or timing to try to find an opportunity would be forced to wait till the macro. You should always, early on, if you're less than like 2-3 years experience and maybe you just learned about these things this year, you should be only taking trades or even considering taking trades or even studying the trades that form inside macros. You need to force the timing discipline, because around the macros is when the best chance for you to be in line with a displacement, especially if we're at a higher time frame PD array, that puts you in the best position to catch a displacement. You know, and ironically, the models of entry a lot of times happen at the start of displacement, right? But yeah, so you see how it's respecting that upper portion of the fair value gap. Like I said, it should if it's going to go lower. Notice how we're still marching lower after we broke this, right? You see how it's just pushing aggressively now, right? It broke through this and now it's unwilling to go higher. So if we break down below this low, these up candles here become what? A bearish order block, right? Then we may not be done targeting sell side. We may get excited enough to even reach down into here. We got that cracking correlation. You obviously see that's in our face. So it makes this low probability, high risk. Those of you in my private group got that very clear, easy to follow A plus, B plus, C plus setup checklist. So make sure that you are using that. If you are, you'd know that because this crack correlation is happening, because we're ahead of a news event, it's not necessarily the highest of probability right now. The checklist is universal. So it doesn't matter what model you have. And for the most part, it's absurdly proven effective all year. So, and you see the high win rate we normally have and have had, minus last month where we lost five trades. So far this month we've won this last one. And if you didn't trust what I was mentioning here, then there hasn't really been much to engage. Remember, the first start of the month, the first week of a month, that's consolidation manipulation, right? The second and third month, or third week of the month, that is expansion, generally, for the monthly range. And then the last week of the month can be a reversal, okay, or just like to cap the monthly range. So yeah, we'll see what happens here. If we get back above this high, that'll be the only time I look to get back in line with buys. Otherwise, like I said, we have an order block here. This low to this high should now act as a BPR, similar to how this was. So price should not come up to the 50% of this delivery in here if we're going to trust the down delivery. The hell is this? Oh, it's the open price for the day. So you see this large railroad in here. Right, one to the buy side, one to the sell side, overlapped. So this low to this high, extreme, we should not come back to the midpoint. It should be a BPR that continues for the moment, pushing us down into maybe these equal lows. But that's even further confirmed as a target if we close below this high to that low, because it should act as what? Similar to this, it should act as a BPR because we got buy side here, sell side, buy side again that broke the high. So if we start violating the mid portion of previous balanced price ranges that held up going higher, again, those are confluences telling you that things have changed, either on the short-term basis because this is a lower time frame, or if you see this on the higher time frame, on a higher time frame basis, which is a more long, drawn-out span of time for a particular narrative. So yeah, just another reminder, if you guys get value from the content, don't forget to like the video, subscribe to the channel, Helps the channel out much more than you probably understand. I didn't understand how important it was. I was like, aren't the views the only thing that matter? And it's not. You could have 100,000 views with no likes, and you will not get natural assistance from YouTube to push you out. That's why people that have bots, right, the bot followers and stuff, if they just get views, no likes or engagement, the algorithms on YouTube realize that that's probably ridiculous. People could have just looked at it in passing, so again, I really appreciate you guys that do that for the channel regularly. So yeah, if you could do that, it's much appreciated. But hopefully today you guys have gotten value. It's been a good lesson given today. We talked about when price was going to do what, what would change this or change that or support this or support that. So hopefully the process has made sense. Hopefully you learned something that you didn't know, or reinforced something that you've already known or been listening to me talk about. All right, notice how we're beautifully coming off that 50% of the previous balanced price range. So this here, again, if we were to break above this swing high, we're now reliably back in line with bullish delivery, right? Otherwise, it'll continue to go lower. I don't trust it because of what DXY is doing. If DXY was rallying, I would be like, yeah, guys, let's take a short in here. But me personally, I'm not, given what we see, I'm not willing to take a short. And we got these relative equal highs up here. I mean, this, again, could very simply have been massive retracement, stop out early buyers, displacement, break above the high, disrespect the order block, shift in market structure, and then use this high to that low as a bullish breaker to then go higher, right? Again, none of the buy side interest is in line at all yet until it was to violate this. Otherwise, this will continue to reach down, maybe even to here, or these relative equal lows. Damn, do I sound like crap today? Incredible. So yeah, you see how this being respected, this high not getting taken, once we broke down below this low, like I said, the likelihood of sell side being targeted becomes much more likely than trying to push a buy. So the only way we get back in line with buys is if it was to break above here. You can see there's been a change in the state of delivery on the 1 hour, right? An assumed change in the state of delivery. You see the candles in there. Got a very large indecision candle for the daily, and so far the week has still been bullish. Right, but this is starting to look more and more like a market maker sell model to target the low down here. We got accumulation, reaccumulation, smart money reversal, first stage distribution, right? We'll see if this can give a fast movement down below the low here. If it is going to get down below there, if this is a market maker sell model, again, these highs should stay intact, and we should be able to quickly drop. That's not at this moment happening. We have deliberately gotten down right below the open price. So this whole move here, getting below the open price, then reacting aggressively with a bearish DXY that then shifts these highs, that shows that this was literally just a displacement lower to manipulate and stop out early buyers so smart money can position at the open price to then go higher. Right, again, bullishness is at the moment off the table, at least on these lower time frames for the time being, unless we were to break some of these highs up here. Right, and all of this delivery to the downside started once we broke down below this low. like we talked about before it happened. Could be the case if it was to break down below this. And then the targets we pointed out have been targeted off the heels of that happening, right? Breaking down below this low. And so the mode of delivery so far is bearish, right? It started bullish. We talked about the move there, talked about this as a move here. Both those attempts ended up failing, right? Offered 20 to 30 points, which is all we're looking for. So you can make a judgment, right? But, you know, like I said, being flexible is important. And hopefully the flexible process, like the different elements that allow us to be flexible, again, I hope that stuff makes sense. If it doesn't, definitely drop a question, because tools are useless if you don't know how to use them. You know, and I show many tools every day. So, very important to ask a question if anything ever doesn't make sense. But yeah, so what I'm going to monitor here is what the behavior is going to be below these lows. All right, we're moving into a macro. All this delivery happened prior to the macro. So if we get displacement from this level and lower DXY, again, this may have all just been manipulation, seek and destroy. That's what it's been, right? The low here, high here, buy side taken, sell side taken. So, you know, we'll kind of see what it wants to do with these highs here. I'm not interested in taking shorts, just given what DXY is doing. I'm just not going to do it. If we move up a little bit in time frame too, if we go to like the 1 hour, it's just a massive wick on that larger time frame. Huge displacement and rejection away from the 50% level. Everybody probably thought, oh, this high, they're going to get it. Chased the buys and got wrecked. Not in this community. Yeah, high, low, right? That's an order block. It's basically just pulling into that at the moment. See the new day opening gap held at this low? Is it London's low? Yeah, London's low is here. Haven't mentioned London's low today. Just know that we always have to keep tabs on London's low. This was London's high, so that run, wait, was it? Yeah. So London's high was purged, and then it went all the way up here and then came all the way down. So it's pretty much a mess. Just a very sideways, large wick environment. Very heavily manipulated. That's to be expected going into CPI. Right, so again, only if we lose this high will we look to buy. Everything else is pushing price lower, or it's going to consolidate. Right, but I need it to prove that it's ready to get back in line. Otherwise, I'm not about to chase it, and neither should you. You see how they dug lower pretty aggressively? And once they blew out that low, you see how they're stuck going sideways? Now, of course, looks like they're going to open up. But they stalled out in here after they took this low. This happens on the higher time frame too, on like the daily and weekly. So if it takes a higher time frame level, expect consolidation. Don't expect it just to keep racing. It may continue eventually, but it takes liquidity and then stalls out because people think it's strong support, right? And then they learn real quick what strong support really is. It's nonsense. Let's go look at, where's 630 at? So we got our first presented for value gap there. So again, none of this is telling us that we're ready to buy at all. It's only favoring shorts, right? This level I said should hold, has held, right? The 50% never got closed above, so the order block bearish is holding. And we stalled out a little bit, accumulated below the low, accumulated within this order block, and then shot a dart through the lows. And DXY is kind of just, hanging around. So yeah, we'll see. So we got, this is a run on stops here. Shift below this low. So this fair value gap, if it's going to short, it should be able to use this, assuming it's going to target the lows down here. That'll be something interesting to watch. Again, low probability because DXY is not supportive. It's cracking correlation. So have like max like a 15-point stop if anything. But again, I'm not going to take it. We're going to definitely watch it. This is not something I'm willing to take. Unless DXY was just smashing to the buy side. And you see why? See that my instincts told me that it's not good. But it's definitely worth watching. See the overlap here? That could have a similar scenario to this. Especially if DXY wants to open up. Got real close to the new day opening gap. Huge regular trading hours gap. Dancing around the mid portion of that. That's an interesting observation. It opened up at 6:30 and literally dug lower, targeting the whole regular trading hours gap. So yeah, let's see what happens here. Now got back down below this. That's not indicating that it's willing to go higher. Again, we're going to need displacement above these highs and aggressive bearish DXY for us to look for any type of buy scenario. I can say that if this low stays intact and we were to shift above this high, these consecutive up candles, the high, low, and then the higher high that would be created as a result of this being broken, that could turn into a bullish breaker. Congested bullish breaker, but nonetheless. Yeah, I'm not going to take a short in here. We could see that it revisited this. It seems as though that's holding. And again, if it does open up, we have these equal lows down here we've been talking about. Yeah, what a mess. Ugh, what a mess. Let me look at the chat. Yeah, that inversion fair value gap we talked about, beautiful response off of it. Seems like we're still somewhat holding. Or we definitely are holding in here, but currencies are not really willing to do anything at all. Again, this is all pre-CPI navigation. You know, I'm sure that if you looked at this and you thought about, you know, if you were not on this call, especially if you're new, you probably would have taken a loss today, right? Like you probably would have did something you shouldn't have done. Maybe, maybe not, right? But for the most part, that's the type of feedback I get. So, those of you that have been with me for a pretty long time, you definitely had a better chance of not getting wrecked, right? But, yeah, it's definitely a ripe environment for you to blow your funded accounts, blow your personal account, doubt yourself, think this is impossible when it's not. But that's why it's good to be around people that understand what's happening. So yeah. Again, there's nothing in here at all that tells me, hey guys, let's do something. Maybe you could have made the argument for this order block, like I was saying, and then taken this, but then quickly got out. I mean, that's a pretty nice move. 50 points off the order block. Run on stops up here. Big shift, right? Reaction here, inversion. And then one more return to then try to target down here, but it never finished it. It finished this, right? That may be all it needs. But it's going to have to shift above this high for me to assume that, to go higher. Otherwise, like I said, it's just going to either keep accumulating and not do anything, or keep trying to attack this low down here, which is previous. It's previous Asia session low, and this is London's low. Damn, my freaking voice is absolutely horrendous today. Freaking throat, horrible. Hate being sick. It's so annoying. It's the most annoying crap ever. Hopefully you guys haven't got sick this year. Hopefully you don't get sick. It's a pain in the ass. That's for sure. Begin some life. Oh wow, that's a new day opening gap from a different day, from Monday. The new day opening gap got met. Alright, well, looks like we may get what I've been wanting to see price do. Okay, now we got this order block being really contested. Now got run on stops, new day opening gap delivery from Monday. Pretty much almost an entire closure of the regular trading hours gap today. Got the relative equal highs up here. Now we're getting displacement. So now we got a 5-minute change in a state of delivery. After purging out the lows, this is a good thing for us to want to go higher if DXY can continue to drop. So yeah, let's see how this is treated in here. We're still inside the silver bullet now in the more reliable macro. So yeah, we'll see what it wants to do here. Where the hell? Why did my first presented for value gap go away? Yeah, that's it right there. And notice how it's respecting that? Like a rocket. So let's see if this can continue with bearish DXY. Like I said, this high to this low should now, I mean, you could see that this order block's being broken, so that means a BPR has been violated to the buy side. And now we have this to watch. So yeah, it's holding in here. Let's see if it can hold and try to get us up to the buy side. Might be a little too ambitious because CPI is tomorrow. They may not want to get up there, but ideally, if this was a different day and we did this and DXY was bearish like this, we're aiming for buy side at this point. It's now failed to continue. It's reacted from a higher time frame level or an important gap, right? And we have basically now shifted market structure, changed the state of delivery again, now to the buy side. Higher time frame is still bullish. That's why this could be trustworthy potentially. DXY is falling. We're back in line with correlation. Currencies are still doing a bunch of nonsense. Looks like they're somewhat gravitating more to the buy side here. And with the bond still going higher, yield still going lower. The other indices are a bit cracked in correlation. S&P though and the Nasdaq are holding up. And the Nasdaq has violated levels it should have held it if it was to be reliable to the downside, right? So we'll see if we're getting back in line with this moving higher and we'll finish up here potentially. Or are we just trading back into the range to consolidate, which is a possibility because of CPI tomorrow. Right? So yeah, throughout the call today, for those that may have hopped on a little bit late, we basically navigated and assumed this run higher. Talked about a move in here, talked about a move in here potentially. I executed this one, didn't execute this one. We talked about how if this was to be violated, that would set the stage for these areas to get violated. This one first. It attempted to get all the way down, but it just didn't. And I said that if we break above this, shift above these levels, DXY was to be bearish, that would be the time when we would consider price potentially wanting to attempt the buy side once more. And as you could see, once these certain levels are violated, we're also leaving fair value gaps open. That's a good sign. But once it violates certain levels, price opens up. And it allows you to validate real time. And then if you take this concept to the higher time frame, you could have more of a long-term anticipation, which is what most of you guys have, or if not all of you, have been seeing me do all year. Every Sunday, every live trading call works within Sunday's narrative. We hold that Sunday's narrative, and it's been quarter to quarter we've been correct with where price is going to go. It's 3 months at a time, month to month, day to day, week to week. Some days we'll have to wait, but that doesn't change our higher time frame narrative. That doesn't change the tactics we use, and they can all be used higher time frame down to lower time frame. So let's see how price is going to respect this or not. I think this will probably, we've left these equal highs, so I would obviously like to see them go up. If they end up going lower, again, it's just this isn't worth really trying to do much with. So it could consolidate, but given the fact that we've broken these levels, we should get a shallow retracement. It should not need to come down here. If it does, buys are just not going to happen. Maybe PM session would offer it, but this is pretty messy, but we've been able to navigate it for the most part, right, and find certain things. So yeah, we've now gotten down here, run on stops, shift with a displacement, fair value gap delivery. It's going to have to leave this available, the lower portion. We don't want to see that filled in all the way, assuming that it's going to give one more attempt to the buy side. DXY is falling. Because DXY is falling so aggressively, shorts, they are not to be considered at all. So yeah, we are inside of a 4 minute, pretty nice 4 minute fair value gap right here. What does it look like on the 5 minute? It's got a 5 minute fair value gap. Order block, fair value gap. There could be an argument for this displacement to be a shift and this to be a retracement to go lower. But this isn't trustworthy because of what DXY is doing and not what the higher time frame's telling us, which is still for the moment. Maybe that changes tomorrow, but still for the moment, favoring more so bullishness, as well as just sloppy sideways for the Dow. So yeah, let's see if this can respect this first presented fair value gap, and this red line here. I'm not sure how good you could see that. This is the regular trading hours gap midpoint. So with DXY declining, let's see if this fair value gap here. We did kind of peak above this high, which is interesting, and it aggressively retraced off of that. So we'll see what it wants to do. I want to see how this 4 minute fair value gap holds, which is also within this order block here. So these two PD arrays are going to be very important. I think we're at like a part of the graded price swing here. Or wait, is that the wick? Oh yeah, it's the wick. The daily wick. So the low of the daily wick is right here. Basically like the top of the daily candle, right? The open of the daily candle that created that huge wick right there. It's kind of interesting how when we drop down, it looks a lot closer than it does if you look at the higher time frame. Literally just bounced right off of it. Yeah, the 4-hour fair value gap is definitely something to watch right here. So we've got another drop, overlap of fair value gaps. Let's see if it could invert that. We can't lose this low if this is going to be reliable to get up here. It's pretty nice delivery from that fair value gap. So yeah, shouldn't spend a lot of time in here. Should be able to touch that and run. So now it's digging a little deeper. Remember, we still got this order block in here. So it's an order block and a fair value gap. DXY is still moving lower. But yeah, we're just kind of hanging around. Again, the risk of it doing this the remainder of the session, it's definitely a possibility. It's much more probable than it is on normal days because CPI is tomorrow. It's just a reality, right? And you don't want to blow accounts because price should just move, right? When we're in a time when it may not, you know. Let's see if we take this high to the low here. Notice how we're at equilibrium. So it's kind of just hanging around. Still moving. Still seems like it's gravitating to where we want it to go. So we'll see if we can get up here. So now we've gotten above the open. Let's see if it can close above that. Yeah, it's definitely back in the middle of this overlapping delivery in here. For the most part, its fair value gap's holding up. Kind of delivered 20 if you caught the low into the order block, like right at the order block. It offered another 20 to 30 points off that setup. I thought about taking it. but I hesitated. So I was like, whatever. I already got something. But yeah, so, I talked about this one that went. I talked about this one that one went once it overlapped. I talked about this one once it was formed. So I've called out 3 scenarios where price should move bullish. And, they weren't no home runs, but they offered 20 to 30 points. Which one would you have felt the most comfortable in? That's the real question. So yeah, it's hanging around a little too much, right? So I'd say that by 720, 725, if an entry was in here, your thought process would be like, all right, I'm going to get out. This right here would have me pretty much ready to close the trade, because this is not indicating to us that it wants to move. Like the hypothetical scenario, if I would have executed, I wanted to maybe hold it longer. It did offer 20 to 30, like I said, but you could just see it's very choppy right now. Like I said, the likelihood of us going sideways and not getting up here and not pushing even further down here, it's pretty likely, because they're building up liquidity. They may hang around in here all day, just fizzle out and just go nowhere. And then tomorrow absolutely destroy everybody. So we'll see what happens. We have something in here. Let's talk about continuations again, right? If something in here, or maybe something down here delivered that was within your model, if this is what you saw here, you'd want to see a run on stops, shift in market structure, and then another fair value gap to try to participate in. That order block's really sensitive. That fair value gap, we could see that it's causing sensitivity, so that's a good sign. Pretty much creating another order block here too. We got one right here, and then we got one right there, right, with this orange line right there too. 4 minute and a 5 minute. Got a wick in here. If we get above that high, it should not have to close below this wick. It should be able to continue to hold it. All right, but again, I keep reminding you guys, the condition that we're currently in is low probability, right? Why? Because we're a day before CPI, right? Day before, day of, day after CPI is generally low probability. Doesn't mean you can't trade low probability. It just means the likelihood of precision is much less than it would be on a normal, like a normal time, right? Trading events like CPI, you have to wait till after things come out. Let it hit the market, right? Let it wipe out whatever the hell it's trying to wipe out. Then come back, like an hour or two later, like an hour, hour and a half later. Sometimes even a half hour is okay. And then see what's available based on the list of liquidity that I give you guys. What on that list can be still targeted that hasn't been swept out, right? And then you make a judgment off of that. And if everything's been wiped out, then you have nothing to do. Yeah, it's all working within the fair value gap here. All within that huge range that was created in here. It's 15-minute overlap. Now it's just hanging around the middle of it. If you take this high to this low, you can see we're basically stuck at equilibrium. I can say that if we are going to continue to drop, this is going to have to be left, and this wick needs to hold price below the midpoint. Right, that would be a characteristic you'd like to see if it was going to try down here again. But again, there's no reason to even think about trying to pick the top up here, at least for me. Right, I wouldn't think, oh, this is a rejection to go lower. You know, in order for me to do that, it's going to have to get outside of this. Break down below here once more, hold it as resistance, provide my model, and then I would take it down to the low. But so far, it looks like that 4-minute fair value gap, the order block, these ideas that we've been mentioning, kind of pointing to, they're all basically holding still, just kind of just held within the range here. So yeah, if you look at the 7, right, the open price here, it's right there, yeah. We got a small drop down, right, creating the wick. And now prices ran up. Remember this is an order block. This down delivery, getting up above the open and the high. This is an order block. So it's kind of like building price action, right? Should act as a BPR down here if the order block's valid, because order blocks are balanced price ranges. If this is going to be an order block, the mid portion of that should also be respected. Why? Because order blocks are balanced price ranges. And then every time this type of scenario happens, you think the same way. It should respect it. If it doesn't, there's a problem. And it removes trust. See, look at the delivery here. So yeah, it's turning out to be a much more reliable move. Remember I said 20 to 25 it's going to have to be delivering, right? 720 to 25. And within that time window, it's delivered. We're not going to get into that. Just time stop is very helpful. Yeah. So yeah, again, all three moves that I talked about to get us in position with a buy, even though they haven't been home run hitters, they've slowly moved. Well, two of them moved decent. But they all delivered something, right? This one had more of an order block vibe. This one had an inversion fair value gap vibe. And this one here simply had a YouTube model. Run on stops, shift in market structure, retracement, order block, and then delivery. All of this with cracked in correlation type of scenario. Pre-CPI, so low probability. And price has been range bound. So all of this we've been able to navigate. I talked about how this drop could have been trusted, how you could have maybe considered positioning or anticipating that it's going to drop down below. We talked about this low. We talked about everything that led to that. So that's a big part of the lesson today. Talked about all this, navigating all this. Talked about how these highs, if they're taken, it'll probably continue to go higher, similar to this. When it got taken, it went lower. Right? So hopefully these different elements, I've talked about them a lot, right, over the last year. But hopefully this stuff is sticking to you. Hopefully it's sticky. I try to make it sticky, right? And I pull you to the most important things. So hopefully you guys have been able to pull these out. And hopefully today's made sense and you guys have gotten value. You know, do you guys have any questions about anything we've talked about? We've called 3 chances today. We've pointed out 3 moves. All 3 of them moved. Maybe you thought of a short, right? I'm not going to argue with you to target this. Once this low broke, I mentioned that if it broke, it's probably likely to go down below the sell side. It did. This here is a move. This was a small run on stops. This was an actual run on stops. And then we got displacement, fair value gap, overlap, inversion, right? Targeting equal lows. So there's nothing wrong with that. If that's what you thought, just know that hopefully you knew that that was counter trend. Right, but now we're above another order block. So let's see what DXY does here. Got a huge cracking correlation between the Dow and the other indices. The Dow made all-time highs, but the other two have not. So we'll see if that has an impact. We could clearly see there's a cracking correlation overall. It's not really any SMT. I mean, I guess you could argue that there is one here. I'm not sure how reliable that'll be. It's not the full high. So I'm not sure how reliable that'll be. We'll see. Yeah, so now we're coming back into this order block, right? Kind of pulled into this. Again, like I said, this upper level here should not get traded to, and we should get displacement if it's going to drop and use this. If we shift below this low, we're probably not done taking out these lows. This is probably all just like, in that case, if it was to break this, it was all just a retracement. Pull people in, and then try to purge them out, dropping down below. But yeah, again, there's nothing I'm really interested in trying to engage here. It's just, yeah, it's just nasty. So beautiful reaction from DXY though. Still supportive of down delivery. Still looks like a mess on the weekly chart, right? Still gravitating to the downside though. Nothing's changed until like this high gets broken. It's this high here, and you can't even see it here on this one. It's up there. But yeah. So let's see if it can hold this. These equal highs have been purged. Got to run on stops. Order block in there. If DXY falls after sweeping this high, this order block here will probably launch price up to these equal highs up here. That's what I'd like to see. You know, nothing tells me short right now unless we break this low. So yeah. So yeah, we may kick back in line, right? So run on stops, shift above this high, inversion fair value gap, bearish DXY, very high resistance. You could see the delivery, but we may get one more opened up price delivery. You know, we'll see. But again, I'm going to elect to just watch, but keep in mind what I just mentioned here. I already executed today. Took my one trade, but I've called out 3. Is it going to be 4? see what happens. Yeah, this inversion should hold here if it's going to go to the buy side. DXY sure supports it, so let's see if we can't hold this order block in the inversion fair value gap. All right, well, someone turned that off pretty quick. DXY is sure more dynamic today. It's been still kind of a mess, but definitely is telling you what it's favoring. It's favoring the downturn. So we should still be able to see this hold, even though it's kind of traded a little bit deeper than I would have wanted it to. None of this is telling us that the buys are going to stop right now. Again, the buys turn off when we break this low. Right, at least for this scenario to get up here. But yeah, I mean, you could just see that it's just nasty. There's no intent, like any one-sided interest at the moment. You know, and it makes sense because CPI is tomorrow. So yeah, we'll be on again tomorrow at. Oh, well, I'll be with my private group tomorrow. So I'll be on, those of you that are in the private group, we'll be on at 5 and then 6 on Friday. And we'll see what happens. Still think that this is going to go higher. Right? It looks like it's somewhat opening up. But we'll see. We'll freaking see. Okay, we'll see. Don't really like the fact that this stuff was left. But then again, it did sweep it on these other on the Dow. So technically, there's SMT there. So yeah, we'll see. DXY falling, supportive of this going higher. Still holding within that order block, within the fair value gap. So we're above the first presented fair value gap. We're above the first 30 minutes of the overnight range. We're above the regular trading hours gap 50%. But we've kind of traded inside the regular trading hours gap a good amount. And you can notice from this low to the low of this little yellow box here, that's the rest of the regular trading hours gap that was left. They didn't completely fill it in. So if it takes this low out and this fails, and say DXY turns a little bit, or maybe not, but if it breaks this low, we still have this that could come, or that it could come and sweep out, right? It could come and try to, wipe that out, rebalance it. Or however you like to describe things getting retraded to. But yeah, it's nothing to do except watch to see how this is going to hold. They're definitely accumulating in this position. So with DXY falling, I would say that it's more likely to go higher, obviously. But with CPI, you never know. Day before CPI, I mean, it's proven that it doesn't want to go really anywhere. It's just kind of ran into that. And it's definitely suspect that they left such a small portion of this available down here. So maybe PM session will come around and try to turn against it, right? Come and hit this, sweep out this low, then it'll look to deliver. If it doesn't do anything significant from here, like this time to 8 o'clock a.m. Pacific Standard Time, right? Like 20 minutes. Then it'll probably save whatever else it's trying to do for PM session. Because we'll be knocking at the door at 8 o'clock, knocking at the door of the lunch hour. So yeah, we're really now pushing deep into the order block here. Right, so let's keep looking at that. So little stop run here, stop run here. S&P is kind of opening up to the downside. The Dow too. There's S&T at the lows there. It's kind of suspicious though, huh? It just looks too perfect. But yeah, the only way that we go to the downside is if we take this low out, like I said. Otherwise, it's either going to consolidate or we're going to break from here. Right, the order block here, here, inversion fair value gap. Go on the 15-minute. This type of price action can get you exhausted. Like if you're in a trade, managing the trade, your mental capital by now, most of the time will be completely depleted. And you'll just give up on the move. If you had an execution on in any type of scenario like this, it is exhausting. Like you want to go to sleep, right? That's why we try to avoid moments that put us in position like this, like ahead of a news event, during a news event. It's kind of sporadic during a news event, day before, day of, day after a holiday. This type of stuff is very common around those times, and today's no different, right? It's had some flurries of displacement, but nonetheless we've now kind of died out. DXY2, it's kind of just stuck. So we're approaching the 750 macro, so it's probably going to make a decision soon. If it doesn't, it just stalls out continuously, then that tells you what the vibe is the rest of the day and what you should do. If you trade the AM session with me, there's no need or reason to even look at the PM session unless you're studying. If you've decided that the AM session is what you're going to do, you want to stick to one session. And if you do more, you're going to have a lot more mental capital. And your risk management has to be even more tiny, you know. Unless you take one in AM, one in PM, then that's a different story. ICT mentions to do that for people that want to trade both. You have one, give yourself one attempt in AM session. Try to see if you can nail it down. If you get it, stop. If not, if you have the option to go to PM session, you know, just maybe save one bullet for PM session 2. I just exhaust everything in the AM session because I want to just get on and get out. If I win, great. If I lose, great. So what? I'll come back tomorrow. But today we won, right? Okay, we called out this inversion in here, executed this, and yeah. So 21 points. For those that may have missed it. The inversion here. Took it right in the inversion. Rallied it up. 21 3/4. Not bad. Not bad at all. And then price turned. Right? So that's why you gotta be here, you gotta pay attention. Okay. Can't be watching other YouTube videos and looking at your phone or doing any other stuff, because you'll miss it, especially with what we do. I call really large price swings, which I've proven all year, but I'm a scalping day trader. You know, most of the time I scalp 20 to 30 points. Sometimes it's more. You know, biggest run I got today was, or this year was 1,300 point move when the tariffs were being talked about to short, and I secured 230 of it, but it ran 1,300 points, and that's the biggest trade I got this year. The rest of them have varied from, you know, 20 points to 60 points. I like to live in that world. Could do plenty with 20 to 30 points. Anything more is extra. Especially because we're able to come in and find something every day. Even in situations like this. Guaranteed, any live streamers that are live streaming today, they are struggling. They're in deep drawdown. They probably turned their stream off. You know, people probably blew their accounts. It's probably chaos right now. You know, we're over here just chilling. You know, just how it always is. You want to be bored when you're trading, because if you're excited, too excited, you could be excited. But if you're too excited, everything is like a Super Bowl, like every second. Oh, it's here, it's going up, it's going up. Oh, it's gonna go up. Come to daddy, it's going up. Right, that type of behavior. You're training yourself to be emotionally charged. You know, it's fun to watch. I love watching people blow their accounts that talk all this shit just on social media, going crazy. Oh yeah, blah blah blah. Then their whole account's liquidated, and everybody that followed them gets liquidated. I mean, it's rough. Like, it's brutal if you think about it. Man. But, you know, that's the industry. That is the industry. So, that type of vibe is what pulled me in. That's for sure. Probably what pulled you guys in, too. It's good marketing. But, hey, I'm here to trade and create monsters, right? Not be some entertaining celebrity, right? Yeah, there is price opening up, getting closer to this 750 macro. I guess that's what it needed. The order block here has still been respected, right? It's still been holding up. So looks like we may in fact get that. So from this high to that low, that's also equilibrium. So if it's going to break out, it will have done it from this level. And it seems like that's going to be the case. We'll see. We'll see. We'll see. So yeah, this move I called earlier, if you held it, would have made you work for the 30, but it offered 35-ish. $36 exactly. We also got this order block here too. Got that wick. So let's see what the reaction is going to be. DX, I think DX, is it opening? It's opening up a little bit to the downside. Very nasty delivery in here. So this will probably be the last observation, right? How price delivers in here. And then we'll wrap it up and call it a day. It's been a pretty good day, right? Called a decent amount of moves. We may end up seeing a fourth one form in here. Not too sure how likely it is, given it's just not willing to go. It seems like it's more likely that we're going to consolidate. So, you know, this run higher here, talked about that. This run here, inverting the fair value gap. And then breaking above this high. We talked about how if it gets up there, it should be able to go. You know, whether it gets up here or not, obviously it's overzealous. But all we look for is 20 to 30 points, and this absolutely fit the bill. And then let's see if this order block can give us one more push, if DXY can decline within the 750 macro. Then we got this inversion here as well. So yeah, if we lose this low now, instead of this low being the trigger to go lower, now it's this low. Right? So we're now inside the last macro that we talk about, or for at least the last one for the AM session. So let's see, can we open up after all this laggy, waiting, holding delivery? Are we going to finally open up? Could very well be the case. Better question is, do you see your model here? If the answer is no, there's nothing for you to engage. Stuff to watch, characteristics to study. But if your model is not here on this 1 minute chart and that's your execution time frame, there's nothing for you to engage. There's nothing for you to think you missed out on. There's nothing at all to worry about. As always, right? Yeah, very interesting how the new week opening gap from Monday Price traded into it, and that's the low. For at least the low for AM session. So we built a lot of liquidity down here. Did purge it here. But again, if we take that low out, we may see a deeper run. It's still respecting this fair value gap up here I talked about. Dug a little deeper than I would have assumed it would if it was to drop, but hey, they want to wipe everybody out. So yeah, we're watching that low here. DXY is a shit show. So now this inversion fair value gap is turning off in terms of supporting continued delivery to the buy side. We are back inside this order block, so we'll see what that wants to do. Where is that order block? I think I'd rather use the 5-minute. So yeah, we're getting a strong movement here with the DXY. It's seeming like it's correlating. The Dow is tanking, so is that gonna pull these with it? If DXY goes higher, it probably will. We got relative equal lows here on the DXY. So that's something to watch. We can cut the fair value gap into quadrants here. And notice how it hasn't displaced through that inversion fair value gap. It's kind of just used it, right? It's bounced around. It's like a magnet. And now we're starting to open up. You know, still respecting the order block down here, still respecting the one I mentioned earlier. It's also respecting the 50% level here of the fair value gap. So let's see what happens. It's very much just a sideways market, so so yeah, with that being said, I guess it doesn't really look like it's going to do anything. We have our opinions though, right? We have our assumptions. If price holds these levels, it's going to go higher. If it was to displace down below this, that may set the stage for a deeper run lower. We're going to support and lean more towards the buy side being delivered. but we have our contingency plan. Today hopefully showed you guys how important having a contingency plan is, and being able to pick the right areas in price that should change the overall delivery from one direction to the next. We did it twice today. I did it here, right? And we talked about price digging lower, and then we did it here, right? When we talked about all the details leading up to price doing what it's doing currently, moving, gravitating higher. So we did one buy and one sell contingency plan application, right? Or just getting in line simply with where price is going. You know, real time on the lower time frame while working within the higher time frame narrative. Right, so hopefully today that made sense. Hopefully it was a review for some of you. But yeah, you know, hopefully you guys got value today. All right, let me know if you have any questions. As always, I appreciate you guys for hopping on, spending basically 3 hours with me. So I hope you felt your time was well spent. And yeah, for you guys here on YouTube, I will talk to you guys on Sunday. Those of you in my private group, I'm probably going to rest the rest of the day, but I will be up again tomorrow, as always, for another live session. All right? So yeah, with that being said, God bless you guys. Appreciate y'all for hopping on. Don't do anything crazy. CPI's tomorrow. And let's finish the week on a positive, safe note. All right? So yeah, I'll talk to you guys on the next one.